One, you need to know what you're owning, and you need to do your fundamental research, and not have a kind of a punting mentality. Oh, this seems interesting. Let's take a bit of it. You need to be able to understand and monitor and analyze what you decide to own. And this is particularly important at this stage, and it's particularly important in terms of some of the segments under stress, but also for any other segment, because credit by definition has asymmetry of returns. Particularly to kind of contextualize that a little bit more in terms of what's happening now, particularly within the property sector and in China. And the numbers that Todd was mentioning earlier was essentially some of the JP Morgan estimates. We think it's probably going to be, so in terms of the default rate, for instance, for Asia, this year it could be around 9%. We think it probably might be a bit less than that. But even if it's less than that, it is a significant chunk, for instance, of China high yield, which could be as high as 20 to 25%. So that leads me to my second point, is not only doing fundamental research and having the teams do so, and having the outreach and the engagement with the issuers and so on, but it's also important, and that's specifically for China, to understand what the policy direction is. Because if you try to sail against that, it's not a winning investment strategy. It's important to understand what segments they would like to focus on, what segments they're encouraging, what segments they're deleveraging, get the pulse in terms of how much, what their risks, what their pain threshold is, what the risk tolerance is. And I think that's critically important for investing in China, and hence investing in Asia, because of how dominant China is in this market. That would be essentially, in a nutshell, how to avoid defaults.